Section 50001 of the California Health and Safety Code reads, "The legislature finds and declares that the subject of housing is of vital statewide importance to the health, safety, and welfare of the residents of this state." Section 50010 declares there is an urgent and continuing need to provide affordable housing to meet the increasingly unfulfilled housing needs of this state. 40 years ago, the state of California acted to address this urgent and continuing need. 3 state legislators, George Zenovich, George Moscone, and Pete Chacon, worked tirelessly through the Reagan administration of 1974 to engineer a bill that would create a housing finance agency. Their bills passed both houses, but were vetoed by Governor Reagan. They came very close to overriding the veto, even chartering a private jet so a 27th Senate aye vote could fly in from New Mexico to be counted, but a last-minute defection left the veto intact. The new administration of 1975 was a sea change, as Governor Brown recognized the true need for affordable housing. He proclaimed the first extraordinary session of the legislature on February 17th. AB 1X and SB 2X were introduced on that day. Brown signed AB 1X, known as the Zenovich-Moscone-Chacon Housing and Home Finance Act of 1975, into law on June 27th. 91 days later, on September 26th, the California Housing Finance Agency was born. There were a novel's worth of twists and turns behind the founding. You can even read about it in Michael Bevier's Politics Backstage, a fascinating look at the maneuvering behind the scenes. It took a little time to get things set up. Staff, administration, bond issuance. Once CalHFA moved into its first office at 300 Capitol Mall, though, things moved quickly. It took less than 2 years to make the first single-family loan. In January of 1977, Jose and Carmelita de la Cruz moved with their family into a modest home in San Jose. The average CalHFA home loan that year was just a hair over $31,000. CalHFA also began issuing its own mortgage insurance and put together its first multifamily deal, financing Woodbridge Village senior housing in St. Helena in January of 1978. The second decade of CalHFA saw the advent of one of our most socially conscious programs, the Self-Help Builder Assistance Program. This innovative idea provided a very low interest rate, down to 3%, for people who were willing to put in the sweat equity. This let very low-income people be a part of the construction process and truly feel pride of ownership. CalHFA also began our long-running cooperation with cities and counties through the Affordable Housing Partnership Program. This allowed city and county down payment assistance money to be used in conjunction with our down payment programs. It demonstrated the power of layering, which was to find its zenith in the next decade. In the decade between 1996 and 2005, CalHFA introduced 11 new programs, and in the brave new world of the internet, rebranded to set itself apart from Colorado and Connecticut. CalHFA gained access to hundreds of millions of dollars in new financing with the passage of Propositions 46 and 1C. These propositions enabled CalHFA to expand its reach to teachers, disabled and special needs populations, and housing construction and preservation, in addition to the thousands of other residents who were helped by other state departments. During these years, CalHFA reached $1 billion in annual single-family lending, and multifamily lending increased also. The multifamily portfolio included hundreds of affordable housing developments across the state, many of them inspected and monitored by CalHFA's own asset management division. In 2006 and 2007, it seemed like the sky was the limit for housing. Prices were up, up, up. The average CalHFA loan amount in 2007 was $266,000. CalHFA had introduced competitive products that were in line with what the private market was offering, and when the housing market collapsed, CalHFA, like every other lender, was in a precarious position. Unlike many lenders in the private market, CalHFA had a bedrock commitment to prudent financial management. The agency's loan servicing division worked to assist the hardest hit borrowers by modifying loans and restructuring much of its existing portfolio. The incorporation of Keep Your Home California further helped mitigate the effects of the housing crash. Despite the frozen financial markets and the unavailability of lending capital, CalHFA was able to ride out the storm and even continue to help first-time homebuyers via the California Homebuyers Down Payment Assistance Program. CalHFA re-entered the first mortgage market in 2013 with the Cal Plus suite of mortgage products. Through the crisis, CalHFA also administered funding for the Mental Health Services Act housing program, which enabled hundreds of homeless, including veterans with mental health issues, to find a safe, supportive, and permanent place to live. The future holds a lot of promise for CalHFA. The agency has a strong, stable financial base due to the aggressive actions by the Finance Division. Mortgage loan offerings are competitive and appeal to a wide market base of both first-time and non-first-time homebuyers. Multifamily programs are once again ramping up. In a perfect demonstration of how the circle can be continued, the agency provided a new preservation loan to ensure the continued long-term affordability of our very first property, Woodbridge Village in St. Helena. As of 2015, CalHFA had helped more than 153,000 Californians purchase their first home. And we've helped thousands more low and moderate income families find or stay in a decent, affordable place to live through our multifamily programs. CalHFA is committed to continuing this legacy of partnering, promoting, and preserving affordable housing, and we look forward to the next 40 years.